La 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 la, singing in the morning. Actually, it's not morning, it's afternoon, and we are back with another Option Genius show. Today I am by myself, so I'm not going to be joined by Matt, who is normally here. Matt is on vacation. Lucky him. He is in Alaska. I don't know if he's watching, but he should be. Should be doing his job. Should not be leaving me all alone to run this show by myself. No. Oh man. All right. So, what are we going to talk about today? Well, we're going to talk about a lot of stuff today. I have a full at least an hour, I think, of stuff to talk about. So, let's do it. Three main things at least I want to talk about are number one, we are going to be talking about the Jerome Powell and the Fed in interest rates. Then we're going to be talking about a stock that I think is is going to be a 10 bagger. And by a 10 bagger, I mean it's going to go up 10 times. It's going to double 10 times. Um, that is not easy to do. Not very many stocks do that, but I think this one has the potential. It might not. But I think it definitely has potential, and I'm going to lay out my case, and then you decide if it's going to happen or not, and we'll see what happens, right? And then third, we're going to be talking about um, life and stress, and we're going to be talking about a way to improve your trading at the same time improving your quality of life. So stay tuned for that one. That one's going to be pretty cool. So first of all, what happened, right? Well, today, Powell had his speech from Jackson Hole, and everybody was waiting for what he's going to say. The big thing is, hey, are they going to lower rates in their meeting next month? Yes, no, back and forth. Should they lower rates? Because the inflation is not at their target. So why are they going to lower rates? They need to stay firm. They need to keep them at their wherever they are now. Let the economy contract a little bit so that inflation does go down and get to their 2% target. Right now it's at 3%. Um, some people say it feels like it's more than 3%. But yeah, it's at, it's come back down to three, under three, somewhere around there. And they're trying to get it to two, which historically has been around two. But if they lower rates, that could cause inflation to start creeping up again. The other side of the coin is jobs and the economy itself. So the jobs numbers continue to get worse, report after report, meaning that there are fewer jobs open and there are fewer people looking for jobs. So both of those situations have an impact on the economy. So the Fed needs to lower rates so that more companies will hire people, basically. So they're kind of stuck in between a rock and a hard place. And then you also have all the political instability, political shenanigans going on, where the Trump administration is trying to get them to lower rates. Now, obviously, it would be good for the stock market. If the rates go down, it would be good for people in real estate. Trump, right? As people that own a lot of real estate or heavily involved in real estate transactions, if rates go down. So, you know, they might have the administration might have a secondary a secondary reason for wanting rates to go down, but we don't know, right? You never know what's inside of a person, what they're thinking until they tell you. So, but Powell came out today and he gave the market what they wanted, and he said that there's a good chance that they will lower rates in September. Most likely it's going to be a 25-point cut. Doesn't really matter. As long as they start cutting again, the markets are going to be happy. And you can see today, S&P is up 1.5%. The RUT's up 3.79%. The Nasdaq is up over 1.5%. The Dow Jones all-time high up 2% today. Gold is up 1%. VIX is down to 14.4, and Bitcoin is up to 117 plus a coin, up 4.5%. So a lot of stocks are up. Some are still down, but almost everything is up. The banks are up. The small caps are definitely up. Uh, Technology is up. So market got what it wanted. And if you've been listening to the show, you know that we've been talking about this, right? We've been talking about, hey, rates probably going to come down. Are they going to cut twice or three times this year? That's kind of what, September basically baked in now. It's going to be a rate cut. He kind of said it. Um, and so do we get another rate cut? Maybe, maybe not in the year. But until this first rate cut, it's my personal opinion, and this is only my opinion. It's not financial advice or anything like that. So, take it for what it's worth. I'm just some guy on the internet. Um, and then I do feel that the markets are going to continue to go up higher. And so it's going to, at least I have set up my portfolio in a bullish manner, and you've heard that before. So today was a really good day for me in my portfolio. So that was great. Got a comment from Salim. Salim says 10x is not the same as doubling 10x. Uh, True, but a 10 bagger, I believe the way it's I'm not a 10x, but 10x is, it goes up 10 times, I believe. So 10x goes up 10 times, doubles 10 times. I can see how you would compound it. So I'm not sure exactly, but I do think it's going to go up 10x from where it is now. So maybe not doubling. I apologize if I misspoke. But I do think it's going to be, it can definitely 10x from where it is now. And that would be um, uh, super all-time highs for this particular stock, and we'll get into that. So thanks, Salim. Thanks for pointing that out. Appreciate it. It's great to have people chime in. That's how we do it live. So, as far as the markets are concerned, we're going to continue to go higher, I believe, until the rate cut happens. So it's kind of like a sell the news event. After the rate cut happens, we might have a sell-off. Now, keeping in mind that the rate cut will be in September, and September and October are the two worst months of the year for the stock market. And historically, they're the two worst months for selling options as well. September and October are the worst. So, would you be, you know, in a good situation if you were to ride into that rate cut and then get out or stop trading? I think that might be a good idea. I plan myself at least to lighten up my positions going into that. Right now, I want to ride them. I want it to grow as much as it can, as long as it goes up. And then going into that, I'll probably start cutting positions, trades, and go into the rate cut with probably half of what I have now. So we'll see how it goes. Of course, nobody can tell the future. I'm not exactly know what I'm just predicting here, and so we'll see what happens. But that's kind of what I'm looking at. Now the it's harder when you're alone. Sometimes I lose my train of thought. Matt would chime in, but when you're alone, it's a lot harder. Uh, but yeah, so if you guys have any questions or comments while you guys are watching, go ahead and put them in. That does remind me, we did have a question come in. So I'm going to let me pull up that question. And yep, Salim says, buy the rumor, sell the news. That's exactly what we're talking about, when you see the steak, right? You smell this, you see this the sizzle, you want to buy the sizzle and you want to sell the steak. So when the steak comes, it's time to get out. Uh, Now that used to happen a lot with Apple products. I keep saying this, like that was a story with Apple where they would announce a new product and the stock would rally and rally and rally. And then when the product actually came out, then the stock would fall. Like as soon as the day was launch day, the stock would start dropping because everybody would start selling. So that happened a lot. All right. So we have a question here from Jen. Question is, I am curious, how do you utilize inverse ETFs and leveraged ETFs in your portfolio? I have a basic understanding of what leveraged and inverse ETFs are. Okay. So great question. Obviously, a leveraged ETF is a 2-time or 3-time ETF. They use futures, they use options, they use different shenanigans to do better than the underlying ETF. So, for example, QQQ is the ETF for the NASDAQ. So it's supposed to own the same shares as in the NASDAQ Composite Index, but it is an ETF. It's not an index, it's an ETF. The NASDAQ index is NDX. And we're not going to get into the difference between index and ETFs right now, but there are significant differences. Now you have the QQQ, which is a ETF, right? And it owns everything in the Nasdaq Composite Index. It actually owns the shares. Then you have companies who say, hey, you know what? ETF companies who say, hey, I want people to buy my ETF. And when you own an ETF, you actually pay fees. So like a mutual fund, you kind of understand you pay fees when as owning the mutual fund, when you hold a mutual fund. Well, when you also hold a ETF, you also pay fees that are taken out of your position whenever they do. So that is how the ETF companies make money. And that's why there's been so many companies coming out with ETFs because they're like, oh, wow, everybody's transferring from mutual funds now to ETFs. So this is a great way to make money because they really don't have to do much. Like the QQQ, all they got to do is match the NASDAQ. There's no thinking involved, right? But they still take out fees. So they're making money and all they do is market their ETF. So the more people that own the QQQ, the more money the company makes that came out with the ETF. Now, companies came out with, let's say, hey, if you have a QQQ, well, what if you have two times the QQQs? What if you have three times the QQQs? So one of the ones I own is TQQQ. Now, this is a three-time leveraged ETF, meaning that if the NASDAQ goes up $1, the TQQQ is supposed to go up $3. On the flip side, NASDAQ goes down $1. This one is supposed to go down $3. So that's kind of how they work. There's also 2X. The NASDAQ, they have 1X, 2X, 3X on the S&Ps, on the Dow. They're now coming out with 2X and 3Xs on individual stocks. Tesla, Meta, Coinbase, Robinhood, a lot of the more popular tech names have their own leverage ETFs now. I believe I heard that they're also coming out with a four times leverage ETF on the S&P. So I don't know when it's going to stop, but in order to leverage an ETF, you have to use futures and options and borrow money to get that same oomph in return. Now, because they're using futures and because they're using options, there's different pieces to it, right? Because options have theta decay that you got to worry about. Futures have different aspects. If you're holding futures, there is a cost to hold a future, and then when you roll the future from one expiration to the next, there is a cost there, and so there's different costs that have um, that have different effects on the ETF. So most of the ETFs, even though they're supposed to be like, let's say three times, they're not exactly three times. They might be 2.7, 2.5, depending on how good the company is at mirroring what the underlying is doing, what the base that they're basing it on is doing. So if they're really good managers, then they'll get close to the three times or two times. If they're not, they won't. If they screw up, they'll get they might get two times instead of three times. And so what most people say is because of these extra fees, the option theta decay and the futures fees, the fees for holding a leveraged ETF are much higher than if you were holding the QQQ or just the regular ETF. And so the word on the street or the professional money managers or financial brokers, financial advisors, all them, they will tell you not to hold, not to own a leveraged ETF for the long term. Because of the fees, they say you will not get that same umph return. It won't be the same 2X or 3X that you're looking for. But on the downside, it could be even more. because the fees are greater. So you're paying the fees, plus you're also paying for maybe an underperformance of what could be underperformance, even though it might not, right? Um, that is the official word on the street, what they say, the official advice. I I tend to, it makes sense. I've looked at the numbers and it does make sense that could happen, that should happen. But for me, I've held TQQQ in one account or another for years, um, years and years. So I'm not even sure how long. It's probably been close to 7, 8, maybe 10 years. And it is the number one best performing stock, ETF, whatever holding that I have had. And so that, I mean, did it do three times the Nasdaq? Probably not. I haven't checked, but did it definitely outperform the Nasdaq? Yes. So even after the fees, it did a lot better, and it's done. I'm happy. So that's kind of my personal take on that. Inverse ETFs are the opposite, where if the ETF goes up, the inverse ETF will go down. So if you want to place a bet that the S&P is going to go down, you can buy an inverse ETF. And so when the market goes down, this inverse ETF will go up. Now, I think these were created for hedge funds and mutual funds and these type of financial instruments that cannot go short. So there are a lot of hedge funds that are long only, meaning they cannot short a stock. So they have an option like, hey, if things are going to go down, we can either buy puts or we could buy these inverse ETFs. So they don't really have much choice. They could get out of everything, but then they can't make any money. But they want to go short, but they can't go short because the rules of the hedge fund say, hey, this hedge fund cannot go short. And so then they have to buy an inverse or they have to buy options. So the inverse doesn't have theta decay. So that might be, they might be leaning in that direction. It's like, oh, I'd rather buy the inverse. Now, again, with the inverses, it's the same thing. It doesn't go down exactly the same amount. So if S&PX is up 1% or down 1%, it doesn't mean that this thing is going to be up 1% and vice versa. So, um, you know, uh, the funny story, when I first started trading, I was trading through the Great Recession. And after a while, things were going so crazy, I didn't know what to do. No matter what I did, I was losing. I didn't know. I have a clue what to do. And so there was two different ETFs that were leveraged. One was the SSO and one was the SDS. Now, one of these was two times the S&P 500, and the other one was inverse, two times the S&P 500. So technically, they should cancel each other out, right? So if the S&P goes up one, then one of these should go up 2%, the other one should go down 2%. They should cancel each other out. Now, in my craziness or my basically just not like I just went nuts. I didn't know what the heck I was doing. And so I actually bought both. I bought both of the ETFs, the two times going up and the inverse two times. And my thought was, yeah, they're going to cancel each other out. They didn't. I still ended up losing money. So it didn't matter what the S&P did, if it went up or it went down. Overall, after that time frame when I had both of them, I still ended up negative, which was beyond comprehension. It just goes to show you sometimes when you're trading and you're in over your head, you're making mistakes and you don't even know what you're doing and you're still losing. So, um, you know, take that lesson for what it is. It happens, we all go crazy from time to time, but it was something I was trying out and I was like, okay, if I do this, there's no way I can lose. Right. For me, staying out of the market was like, I don't want to do that. I'm going to give up. I don't want to give up. I want to keep doing this. I want to make it work. And that was probably the stupidest thing. When you don't know what's going on in the market, and the market is just way too wild, that's when you get out. There's no shame in getting out of the market. There's no shame in sitting saying, hey, you know what? I'm not going to trade right now. I'm going to wait till things calm down. I'm going to wait for the market to come to me. And that's what actually we're going to be talking about in the last segment today. And so this was just another you know story that I have of craziness that I've done. And hopefully you don't make that same mistake. So that's kind of how these leveraged ETFs and inverse ones work. I personally don't use any of the inverse ones anymore. Um, I'd rather be out of the market when things are going down. I've learned that the hard way, and I found that when you do have a bear market, when you do have the market, repeatedly going down after down, you're in a recession or whatever situation you're in, they are the biggest rallies happen in these down markets, meaning that the market could go down 1%, 5, 6, 7, 10 days in a row, and then all of a sudden the next day it could be up 6, 7% for no reason. They call them rip your face off rallies. And so if you are in an inverse ETF, you might be doing great. Like, oh, hey, this is you're doing great. This is doing great. And then that one day, boom, so that's why I don't like going short. Um, it it's kind of counterintuitive to what we believe. You buy low, you sell high. But if you're shorting, you actually want it to go down, right? I'm the one I try not to pick direction. I try to play the probabilities, and so I'm gonna let the markets do what they want. And so that's why I don't personally do inverse. But I am in TQQQ still. SPX also has one called SPXL. That one is a 3 times SPX. So that one I'm also in right now. And both of those are doing very well. Now, I will not stay in them forever. If I see the market turning around, I'll probably get out because again, when things go down, these things will go down much greater than the overall markets as well. So you have to be more nimble. And if you really want to, they both have options available on them. Now, I would not sell credit spreads on these. Um, I might sell naked puts if I wanted to get assigned, but probably I would just right now I'm just playing the straight up stock. I'm not getting cute with them. I'm not playing options on these. They do have options, but I mean, you own these because you want a big move and you want to make a bunch of money really quickly. And so a covered call kind of defeats the purpose, right? Um, a naked put, you could end up owning the thing when it's going down, 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 and it'll go down faster than you can blink. So and credit spreads, if I'm looking to make 10%, I'm going to play it a credit spread on something with a much lower beta, meaning it's not as volatile and it's a much more less stressful trade. So that's my take. It's a good question, and I appreciate the question. Hopefully, I answered it properly, and they are worth it for short term. So right now, like I said, hey, I think the markets are going to go up. So I'm holding both of these, TQQQ and SPXL. And when I look at them, the TQQQ is actually it was outperforming. Now it's a little bit underperforming. I mean, the SPXL is doing a little bit better right now than the TQQQ. I bought them both at the same time. Um, and I have roughly about the same amount of money in both, and the SPXL is doing a little bit better. The TQQ was doing better until last week, so they go back and forth. So I don't really see a difference. It's basically okay, which is going to do better, the Qs, the Nasdaq, or the S&P? You never know. So that's that. Okay, so let me head on back over here. Let's see. Before I head into the next segment. Let's see if we have any questions. No, no questions. All right, cool. Okay. So, uh, the 10 bagger, right? The 10 bagger. Okay. Now, right now, we have a the world is rapidly changing. Everything is changing. And there is another arms race that we've seen it start. We're basically at the infancy. It's been going for a little bit now. under the radar. But now it's front and center. Everybody can see it. You probably know what I'm talking about. It's the AI race. It's just like, the space race. It's just like the Cold War with the nuclear weapon race. This one, I don't know if it's more important or of more, things for than the nuclear race, but it is going to shape the next 50 years, 100 years, whoever wins this race. And right now it's between the United States and China. Now, in the AI race, there are different components, and both of these countries are trying to be on top of all of these different components, right? So there's the chips that run everything. There's the cloud that stores all the data. There's energy that runs all the data centers and the chips and the manufacturing. And then there's the actual LLMs, the large language models, which is the actual AI stuff. Now, currently, we can go through each one of these. Um, for the cloud, I do believe the US is winning. We have Microsoft Azure, we have Google, we have AWS with Amazon. There are other smaller players. Um, I do believe that the US is winning, but when it comes to these data centers, everybody's making them. They're making them all over the world. Um, China's making their own, so it's not that difficult to open a building, stack it up with servers, and keep it cool, right? Um, it does take money, it does take time, but China is amazingly proficient at building stuff much faster than in the US. So they can easily catch up. They can easily have more capacity in data centers than the US does. I heard just yesterday that because of the need for these data centers and how much AI is coming down the pipe, uh, that there are billionaires that have plans and they're making plans to come up with ideas of where they can put these data centers because there won't be enough room. And so they're actually planning data centers on the moon. Yeah, on the moon. They're actually planning a nuclear facility on the moon, and they're actually planning to build data centers on the moon using the energy from the nuclear facility. So I don't know how that's going to work. That's beyond my pay grade. Uh, but that's what people are talking about. And that tells you the amount of money that is going to go into this race, right? I don't know if it's winner take all, but it's going to be like winner takes most in this situation. So that's just the data centers and the cloud and the storage. For that, you also need energy, a lot of energy. And in this one, China is definitely ahead. I mean, China's killing America in terms of energy. Their network, their energy grid is new and able to handle it, and they're using all of the different types of energy: solar, wind, hydro, um, and they are on top of their game and they have more energy than they need. The United States, on the other hand, we don't even have enough energy to light our houses. Our grid is falling apart, and um, it's a pretty sad state that the U.S. has not kept their energy grid up to standard. So big problems here, and that's why you see, Google and Facebook and these larger companies trying to go after nuclear, trying to, you know, work and combine and come up with agreements with the energy companies to, hey, we need this much power, we need you to provide it. We're on a contract, we'll pay you X, and please make it happen. Right now, on the energy side, the U.S. is moving forward with fission and fusion and nuclear. Now, if fission and fusion or one of them work, that might be the end of all the energy problems. Um, if not, then it might be nuclear that comes to the rescue, but we don't know. But that's kind of where we're at there. In the LLMs, the large language models, right now, you've seen OpenAI. you've seen Grok, you've seen Perplexity. Um, what are the other ones? Claude with Anthropic. Microsoft Meta has no, sorry, Meta has their own, and Google has their own, the Gemini, and Microsoft has the Copilot, and there's just so many of them, and they're all trying to outdo each other. They're trying to, one up each other, and I think America has the lead here. Now they are paying for it, right? All of these companies are spending hundreds of millions of dollars. They're trying to hire talent away from each other. Facebook is paying over $100 million per person for AI engineers, which is $100 million to a one person. Wow. That's a change, right? We thought that baseball players and football players were the ones that got the most money. No, it's these guys, these AI nerds that are making so much money. It's incredible the way the world changes. But China, the problem with China is they don't have all of the chips. They're behind on the chips. And so the language models that they come up with have to confine and work with the chips that they have. And so they've actually been really good at finding and creating models that are much cheaper to build, and they work on older chips. And so you have Manus, you have Tencent, you have Baidu. They're all coming out with their own AI models, and some of them are pretty good. DeepSeek, I believe was DeepMind or DeepSeek or one of them, Deep something, was a Chinese model that put the world, on notice. Say, hey, look, China can do it too. So I don't know. Over here, I think America has the lead, but China is doing it cheaper and faster. Now that leads me to the final thing, which is the chips. Now, NVIDIA is the king right now in creating the chips, designing the chips, right? And so everybody wants NVIDIA chips because nobody else can create, design these chips as well as NVIDIA. And NVIDIA they're just the king. Now, there are other companies that make chips. Micron makes chips, Samsung makes chips, Broadcom makes chips, but NVIDIA's are by and far the best. And if you go to NVIDIA today and say, hey, look, I want to buy some chips, they'll be like, hey, sure, we'll sell them to you, but we're not going to have any for at least like 4 or 5 years. We're sold out for 4 or 5 years. We cannot make enough chips. That's why you had Elon Musk go to Samsung and buy all of their capacity, all of their chips, all of their manufacturing in the future. Be like, hey, look, I want all your chips. I'll pay you. Here you go. Done deal. Right. And so we have a chip shortage. And that's why they cost so much, because NVIDIA can basically charge what they want. Now, that in the US and NVIDIA are in the driver's seat there. No bones about it. They're in charge. But designing a chip and manufacturing a chip are two different things. So when you come to manufacturing chips, you have the king, which is Taiwan Semiconductor. Now, NVIDIA owns about 66% of the chip market. They get all their chips from made by Taiwan Semi, most of them. Now, Taiwan Semiconductor is in Taiwan, right? And they are the biggest bottleneck of all of this. If there were more chips available, then AI would be progressing even faster. The other, everything else that we talked about, they'd find solutions to it much faster. But the bottleneck is the foundries where they actually produce these chips. Now, Taiwan Semi is the leader in the world. China wants them, and the US wants China not to have them because that's who's gonna control the whole thing, because that's the starting point of AI, right? You guys all know this. So we're talking about, oh yeah, China and America are going to go to war over Taiwan. Why? Yeah, China wants Taiwan back, but they want the chips. I mean, you look at the bottom line, they want the chips. So Taiwan Semi has agreed to open a foundry in the United States. When that's going to happen, we don't know. They're still building. Now, hopefully it's done as fast as possible, but these things, they take years to build. That brings us to our stock. There is a stock in the United States that can make chips. Um, and it has been given the money to make the chips. And I'm talking about Intel. So when we're looking at passive trading and we're looking for a stock that's been around, right? What are the hallmarks of a good passive trading stock? We want a company that's been around, that has a good model. It's going to be around for years. It's slow, it's stodgy, right? We don't want like the momentum names. We don't want it doubling, tripling in a year. We want it slowly, slowly moving higher. We would prefer it to have a dividend, although Intel does not have a dividend as of now. But Intel fits the boat for all of these as a passive trading stock. Now, for years, I have not even paid attention to it because they've had lousy leadership. Their products, nobody likes their products. I remember when Intel Inside meant something, right? They had commercials on TV and every computer had the Intel logo on it. I still remember the little logo on my laptop because the sticker kept coming off and it would be annoying. But Intel was in every single laptop. They lost the lead to AMD. Now AMD is in almost every laptop and every computer instead of Intel. So they have a lot of work to do to come up with. But they've been given billions and billions of dollars by the Biden administration and the CHIPS Act. And then now you have Trump saying, oh, you know what? That money from the CHIPS Act, we didn't give it to you, but we will if we own a piece of the company. Right. So they're trying to get 10% of the company. I looked it up. That is legal, even though it is unprecedented in when it's not an emergency. But according to, Trump's thing is that, hey, this is an emergency. And I tend to agree with him in this position. This is a race. This is important to the future. Everything we want in the future, whether it's flying cars or self-driving cars or robots that can wash the dishes, it's going to need these chips and this AI and this technology. And if we fall behind, then everything's going to come from China, and the US economy is going to be completely different than it is now. We will not be the masters of our own destiny. That is how important this is. And so I applaud the Trump administration for taking a more hands-on stance. I don't like the fact that they own the company. I don't want them owning any companies. That's not capitalism, right? But I think that if there is a steward in place pushing Intel along, I think that the company will do better. And you also have a financial backstop, right? It's like if Intel needs more money, okay, government, pony up, right? And it's going to be basically the the US government making chips, and they have as much money as they need. They have the manpower. They can hire people. They can do what they need. They can cut through the regulations and whatnot, and get it done. So for that reason, I am saying that I think Intel is going to be a 10 bagger. Now, it's not going to happen right away. It might take a few years, several years. I mean, they're a mess right now. Currently, the stock is trading around $24. The highest it's ever been was back in 2000. It was almost at $74. So it's just got to triple from here in order to be an all-time high. And then I think it's going to keep going. And so, you look at the chart, this is a slow stock. All year long, it's been moving sideways. Um, it's been trading in a range, and it is a low dollar stock. It's in the 20s. So it's great for people with smaller accounts who want to be trading naked puts on it. It's great for covered calls. Um, it might even be great for credit spreads because it has tons and tons of option liquidity, option volume. And now that it's in the news, now that it has the backstop, now that it has somebody, big brother, basically overlooking and watching and seeing what they're doing, um, you know, I think the stock goes up from here. Now, is it going to be a good company? Are they going to make good products? I have no clue. I don't know. I don't have any control over that. But I do think that they are going to have to do a better job. And the government is going to make sure that they do a better job. Now, Trump is in office for 3 more years, right? So we have at least a 3-year runway. If, the Democrats take over, they might have different priorities. But with all of the gerrymandering and the changing of the the voting districts and whatnot, who knows? Maybe we'll have another. Maybe JD Vance will take over in 3 years, and everything will continue. But I'm not going to play the political game on that and say like, oh yeah, it's going to change. Da, da, da. We got 3 years for this company to do well, and um, you can, as a passive trading stock, you can make a ton of money off this, even if it doesn't go sideways. Because right now we're sure, without a doubt, that this company is not going out of business. There's no way. It has to stay in business. It has to start doing better because it's national security. And that's the way it is. So the government's going to make sure it's going to have as much money as they need to produce. And so when that happens, there's a floor beneath the price. It can't go much lower than, and so if you're going to be selling, if you're going to be trading options on it, it's a wonderful, wonderful situation. So that is my take on that one. I think Intel is going to be a 10 bagger. I think it might not be a 10 bagger, but if you still trade options on it the way we do, it can still make you a ton of money. 20, 30, 40% a year returns just off the options are possible, even if the stock does nothing. The stock goes up like 5% or 10% a year. Hey, that's on top of everything. So, this one is going to be on my radar. I'm going to be watching it. And hopefully we're going to see it go up, right? From 20, 25, 30, 35, 40, 45 up to the all-time high at maybe 75, and then who knows how far it goes from there. So we'll see what happens. That's my call there. That's my pick. And we'll see. We'll see. I'm gonna take a sip of water for a second. All right. Okay. So now I have a question for you. Is your trading stressing you out? Do you feel a lot of stress, a lot of tension, a lot of fatigue when you think about your portfolio, when you think about your investments, when you think about trading itself? If you do, then we need to talk. Seriously, we need to talk. And maybe I'm going to be your therapist over the next few minutes. But the idea is that obviously stress is no good for anybody, right? The more stress you have, the worse your health gets. It's just not going to, it just doesn't provide you with a good standard of living. Now, reports are in and out. You can debate it, but stress does seem to cause autoimmune diseases, cancers, gut diseases, and that's not even including, grinding of the teeth and headaches and migraines and losing your hair and strokes. Um, so the less stress we have, obviously, the better. Now, when you see most people trading, they are in a very stressful posture, right? They are very stressed out. Now this whole idea came to me because I am right now, I'm reading or rereading the book called The Surrender Experiment by Michael Singer. Now, this is a book where this author is a self-proclaimed hippie, and he is telling his whole life story. So years ago, he he was in college and he had a religious spiritual experience, and his whole life changed. And after that, all he wanted to do was sit in the woods by himself, live in the woods alone as a hermit, and meditate. Just all day meditate, walk around, be in nature, not be bothered by anybody. That was his whole life goal. But life had other plans for him, and life kept giving him projects to do. Small projects, then bigger and bigger. And he decided that he wasn't smart enough to really know what was best for him. So he would leave it up to fate and let fate and life decide what he should do. And so he basically surrendered to whatever came. And that's the whole story of his book. That's what he teaches. And this is a guy who, like I said, was a hippie. living in the woods. He still lives in those same woods. He's always lived in the same woods in Gainesville, Florida. And he started a meditation community. Okay, that's not that big a deal. But then he started one company. Then he started another company. The second company actually went public. It was doing over $100 million a year in sales, um, as a hippie living in the woods in Florida. Okay. He was the CEO of the company that he started. Something that he created is now in the Smithsonian Museum the time capsule to show how technology was changed. And he's a multi New York Times best-selling book for multiple books. All of this, he says, was just by letting life happen. Now, um, as you read the story, as you read the book, there were lots of things that were happening to him, good and bad, up and down. Um, and I'm it's like I'm thinking like, well, what can I get out of this book? What can I learn from this? And it's like, okay, maybe, and I agree with him that there have been many times in my life when I didn't know what to do and I just let go, I just surrendered, and things worked out. Things worked out better than they ever could have worked out on their on if I had, had any say in it. And that's kind of how he lived his whole life. So that got me thinking about my trading. It's like, okay, in my trading, um, I get agitated when a stock doesn't go the way I want to, or a trade doesn't go the way I want to. And I'm doing the opposite of what he did and what he was talking about. And almost all traders do the same thing, right? All of them are trying to take their trades, trying to take the market and make it do what they want it to do. They draw the lines, they do the research, they say, oh, yeah, this stock should be worth this much, so it has to go up to this price, or it has to go down to this price, or it's going to bounce off this level, or it's going to retrace to this part, and da da da. And it has to do that because that's how they trade. And if it doesn't, then it causes problems for them. It causes stress. So I was like, okay, well, luckily that's not how I trade, right? I try to have as less stress as possible in my trading, and I try to trade the market that I have, not the way I want the market to be. And I do that by not predicting. So, like, I don't know if the stock's going to go up or if it's going to go down or if it's going to go sideways, but I want to sell my options so far away that it has plenty of room to move around. And if it doesn't do what I want it to do, then I still can change and adjust my trade and it might still be work out, or I might take a loss and move on. And I have the probabilities on my side. I have the math on my side. So I've kind of tried to put all my trading in a way where it's not a stressful situation. Now, obviously, things can get stressful, right? Um, you have trades going bad because of something that a tweet comes out or a report comes out or a CEO gets caught cheating with his HR director at a concert and then the stock goes down. So, I mean, all kinds of stuff can happen, but we have to realize that the market is not under our control. It never will be. It's bigger than all of us. It's like it's made up of us, but it's bigger than all of us, and none of us are ever going to be able to control this market. And so for us to go in and say, "Oh yeah, you know what? I'm gonna take money out of this market. I'm gonna make the market do what I want." That is the totally wrong way to look at it. And that's I was reminded of this recently with my Eli Lilly trades. Right? I had lost money on Eli Lilly, and I just kept trying to get it back. I just revenge trading, revenge trade after revenge trade after revenge trade, and I'm trying to figure out, hey, how come my account's not going up? Like I'm doing really good trading, except for Eli Lilly. Why is my account not going up? And then finally, I got out of Eli Lilly completely. Finally, I just got out, and I didn't have it on my screen anymore. I don't even remember it anymore. I don't even see it anymore, and my account just skyrocketed. Like all the trades just started working out. So it's like, oh, okay, it's like, okay, I see. I should have not have been in there in the first place, right? The market or the universe or whatever was trying to tell me something. I wasn't listening. I was trying to force what I wanted. I wanted my money back from Eli Lilly. Wrong, right? Like if you take a look at Jim Cramer, okay, Mad Money show, Jim Cramer, he's written several books. He makes predictions all day long. I mean, that's his job, right? Oh, buy, 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 sell, sell, sell. This stock is good. This stock is bad. This is going to go up. This is going to go down. He does that all day long. Can you tell if this guy is stressed out? Like when you watch him, right? I mean, when I watch him, he stresses me out. That guy is so stressed out. He's totally bald. He's hunched over. He's one of the most stressed people I've seen on TV, um, because that's all he does all day, right? And he's been doing it his whole life. He worked at Goldman. He had a hedge fund. Then he became a celebrity. Blah 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 blah. And he's trying to make things happen the way he wants them to be, with the way he thinks they should be, but they don't. And so, people say that, yeah, if you take all of his picks and you do the opposite, you'll actually make money. But if you follow him and you do all of his picks, then you actually lose money. It's weird. Uh, Now you contrast Jim Cramer with Warren Buffett. Now, everybody always talks about Warren Buffett as the example, but in this case, it rings true, right? You take a look at Warren Buffett, and does he exude any kind of stress? Right? Have you ever seen him in a hurry to go be somewhere? Have you ever seen him not smiling? Right? Um, that guy is just like total zen, because if you take a look at the way he trades, right? He does his research. He'll do it slowly, methodically. He'll read up, he'll call people, he'll talk, he'll do his research, and then he buys something. And then once he buys something, he doesn't say, okay, this has to go up. I need to make 20% this year to beat my benchmark. No, he lets the people that are running the company run the company. He pretty much steps back and lets go. He's like, hey, I'm an investor now, or I'm going to be buying this company, but nothing is going to change. You guys keep doing what you're doing. That's why I'm buying you, because I like what you're doing. You keep doing your thing. You keep telling me what you're doing. I want to know what you're doing, but I'll give you some advice from time to time. I'll try to help you out, make connections, but I'm not going to run the show. And you keep doing well, and I'll keep doing well, and I'm stress free. Now, of course, he probably has stress in his life just like everybody else, but his trading is not one of the major stressful things in his life. So you can see the contrast, right? Jim Cramer, buy, 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 sell, sell, sell. Oh, I'm stressed out, yelling, screaming all the time. And Mr. Grandpa, Warren Buffett, just chilling, just relaxing, you know? And so that's kind of what I wanted to get across. Like, if you are trading in a way that it's causing you a lot of stress, it's causing you to not sleep at night, it's causing you to grind your teeth, it's causing you to lose your hair, it's causing you all kinds of different issues, and you don't know why it's happening, it might be your trading. Now, if all this stuff is happening to you and you don't know why, it might be your trading. Um, and if it is, then let's change it. Right? Let's use a different style. Let's be a little bit more, um, letting the market, letting life go, let it go with the flow kind of thing. Instead of trying to predict exactly, okay, this stock has to go up this much, this is going to go here, all that stuff that goes with normal swing trading, day trading, uh, technical analysis, fundamental analysis, all of that stuff. And so, I've even been thinking about it like, hey, you know what? I think it would be a cool experiment, and I think I want to try this. But I'm going to see if I can trade based on stress. So imagine, I put trades on, right? I'm just trading normally, but I don't adjust a trade unless it causes me stress. If I'm stressed out about a trade, then I will either exit it or adjust it. Until then, I'll just leave it alone. I don't know. This is like revolutionary. I don't know. Maybe the book is getting to me. The hippie's getting to me. But I think it might be a new way of trading, or a new way of adjusting at least. So I'm gonna see. I'm gonna start experimenting with that a little bit, maybe a few positions, and see how it goes. It's like, okay, universe, what should I invest in? Okay, universe, what trade should I do? Put it in front of me. I'm not gonna go looking for them. Put it in front of me. Show me what to do, let me know, and then if it causes me stress, I'm going to get out. Because the whole point of trading is to give us money. The whole point of the money is to have us be happier and have a better life and ultimately have less stress. Now, I don't know how this is going to work, but it's an experiment I'm about to try on a small level. I'm not sure yet about going all in on this, but I'm going to try it on a small level and see how it goes, and I'll keep reporting back and seeing how I do. But for now, that's what I had for today. Thank you for joining me. This has been fun. And Matt will be back with me next week on Monday, or sorry, Wednesday. And we'll be talking about what's going on. And I appreciate it. So we'll see you guys all next Wednesday. Take care.